Good morning, guys. Welcome to this Tuesday, June 10th. And we had a nice pop in the overnight. Pretty good trading day yesterday. They were not the bears did not charge in and knock it down. The overnight popped pretty hard. I looked at that before I went to bed. It's like, man, this is a crazy one. And and then when I came back in this morning, it's like all the way down and back up to where this kind of started off. So kind of a volatile overnight is what you would call that one. The news this morning, we don't have a whole lot of news to drive the market at all. We had the small business optimism index came out at 6 a.m. It was to the upside at 9, at 6 a.m. No reaction to talk about there. And that's it. So not really any news to drive the market today. So we are back to just watching, see what the market sentiment is all about. The Everything is kind of chugging along, by the way, in terms of they have a big bill in Congress. They have all these trade talks going on. All that stuff is just kind of ongoing, and the market just kind of kind of slowly climbing that wall of worries, slowly grinding. This is the highest. Look at that. We are right up here against almost up to the all-time highs again, and the market it does not look like you want to stop. So. The news coming out tomorrow, CPI and PPI on Thursday, are only big pieces of news we have this week, which potentially could change the direction, unless we get a headline of some sort, which is not going to be helpful, or something which is like they close the trade deal, in which the market is probably going to be popping on. So a lot of things potentially could happen. I would just look at the structure and this move out of the middle, we are right in at this point. They're right up here. They're not quite clear the edge here, but they're right up at it. And look to me like they run about to clear this edge. So I'm going to start off on the long side again, looking to buy weakness at this point against the 6,000s, 59.90s, 59.85s. Rotations back up. So pretty much the same levels as yesterday from the on the lower end of this range. And let's see if they can extend to the upside. They are right up here against this upper area. It's a borderline call if they cleared it or not, but they ran it hard right up here, stalled. Yesterday's trade was a little balanced day, a little strength today in the overnight. Sometimes you can see a setup like this, which turns into a rotation right back down to value at 5,900. So I'm watching this and thinking, if this upper edge is going to hold the 6,015s to the 25s, if those two edges are going to hold, um, we may see a pretty good pullback right from that upper edge right back down. Not much news to drive the market, so you don't need more than a few big algo players or institutions to start take profit for this and knock this off this edge. So those are the two options in front of us. I'm going to start off on the long side though, looking to buy weakness, 6,000s, 59.90s, 59.85s. It starts trading below that 59.85 level. That takes us right down here to the mode right there, this little attractor, 59.85. That's exactly what this lower support area is at. So if they take that one out, I'm going to be back on the short side looking for a retracement trade all the way down here to the 59.15 to 20s. But if they hold these support areas, I'm going to stay on the long side and see how far they can take it on the upside. So looking for if you get with a little bit of strength, looking for short setups against the 6,015s and the 25s for rotations back and down again. Like it matters a little bit if you start getting early strength right from the get-go, and they start taking this higher, start testing these edges, start taking out 25s, maybe even trade up to the 40s here. I'm going to be looking for short setups, at least in the first two levels. The last one would be at the 40s, 6,040s. And they start clearing that 40s, I think we are solidly on our way higher at that point. But any of these could potentially hold. And sometimes they could be a pretty good fake out when they start taking this higher and you get sucked in on the long side and then they just hammer you. So make sure you don't buy into one of these resistance areas. look for retest failures and potential failure to take out these areas. That's the more likely case. And the time they actually start grinding through the case, that's when you have to just be prepared to cover. If you're in a trade, cover it and not let it run away from you. So that's kind of how we get started. And let's see if this run up here is going to turn into a pullback, a retest failure, or if they're going to be able to extend and maybe even make new highs here. So that's pointing it out. We are up an upper edge, and if that holds, we can see a pretty good pullback. And I think if they take out that 85 level, then I think you have confirmation that we are heading back lower. But at this point, it could go either which way. We don't have a lot of news to drive the market, or we don't have any news to drive the market today. So whatever the market is, it feels like whatever the sentiment is out there, headlines, trade deals, what happens. They had these Chinese trade deals in London yesterday. Haven't heard any outcome. They could have been the reason it popped here. Some optimism on that. Then of course LA is burning, so that's probably not not necessarily driving the markets, but a lot of things out there going on. So we'll see if we get the headline. We'll always watch headlines, and if you start seeing the market moving, there could be something which been announced or something else happening. All right, so that's how we get started on the ES. Let's see if they can extend to the upside. But I've seen this one before. You start off the day all full of hope about the long side of the market, and then they absolutely hammer it because they are right. They're up against this upper edge, and when they decide to knock it down, you get this big pile-on effect to the downside. Not going to necessarily predict that today, but we've seen that a few times before. So, and I would say look for buying opportunities all the way down to that 85 level, and below that one, that's when you say, okay, this guy, they'll take off that long bias, go back range bound or even to the short side and see how far they want to knock it down. All right. So that's the ES. Looking at the bonds and the Nasdaq. Bond market retracing a bit. That's a good sign. I would like that. The bond market is starting to move lower, and that's not a great sign. So now they're bright. So they were down here testing that lower edge. Now they're retracing again, and that's a good sign. So it's if the bond market starts taking out these lower areas, the 111s, start trading below that, the yields are going to start spiking, and that's going to definitely put a damper on the whole thing. It doesn't necessarily have it happen. It doesn't have to happen in the long run, but it's in the short term. People always freak out about these higher interest rates, and it will make long-term borrowing a lot more expensive for a lot of companies. But we've been in high growth economies before where the yields have been a lot higher, so it doesn't have to stop the growth. It just that the transition to higher yields is going to put some heartburn in the market. But the fact that the lower support held and we are trading back up is a pretty good sign. And right now, I would stay on the long side, see if they can retrace this back up to the 113.15. So looking to buy weakness, 12.22s, 12.16s, down to the 12 9 to 10s. If this starts trading below that 12 9 to 10 again, bets are off. We are back to that lower edge again. But that's looking to buy against these three support areas for rotations back up. On the way up, looking for retracement trade on these single prints. Potentially all the way up to that 113.16 area. So that's kind of what I'm looking for on the bonds today. We'll see how that materializes. But the fact that it took out this 12, 22, 23 and it's starting to retrace this move to the downside, that's a good sign. And we'll take that. That's the unemployment or the employment situation reaction from Friday. They ran down here, and this is Monday's trading. So, looking for a retracement trade. Let's see if they can get back up to that 113.16. Nice volume attractor up here. You can see how obvious that is. So let's see if we can get there. But trading it from the long side of the market at least to get started. Nasdaq. That's the guy which has all the cards, right? Look at how hard that one popped. All the way up here to the 21,970s. then all the way back down here to the 700s. So they're already in a 250-point swing back and forth. So it's pretty volatile on the Nasdaq, but so far it looks like it's they're trying to take it back up again. Again, they are again on the Nasdaq. They are up against this upper edge. They stalled up here at the 880 to 900s before. You have a nice 5 letter edge right up there. That's where it's stalling right now. So it's kind of a resistance area. I wouldn't say it's like super strong. I think the one at the on the ES is running it is a bit stronger, but this one here is a resistance area. They stalled here quite a few times, and so far they backed off. Now they start backing off below that 700 level in this 3 letter edge. Yeah, it start thinking about the take off that long bias and go back on the short side, look for a retracement trade all the way back down here to that 500 level. So again, both ES and NASDAQ are right up there, where this little optimism in the morning, you start seeing early strength and it doesn't hold, they start retracing it. I would be fairly quick on the getting on that short side and see how far they want to knock it down. It doesn't, as I said, it doesn't have to happen that way, but you know how it is. It keeps grinding higher and then it takes that freaking elevator down. And you can see that when it kicks in. Usually it'll happen if you get early weakness right from the get-go, you get long, usually have a better shot at potentially taking this higher. If you see straight up strength right from the get-go and it doesn't hold, you're gonna get at least one test of support throughout the middle of the day sometime. And the question is just how strong that gets. It's going to be a rejection of those upper areas and a little bit of a knockdown. But we'll see how it develops. Right now, it looks like they're going to try to take it higher from the get-go. So we'll just play it and trade what we see. So initially looking to buy at this aggressive will be at the 850. We kind of just took that out. Better is 790, 750 down to the 720s. And below 720s, bets are off, take off the long bias and look for potential retracement trades to the downside. So looking to buy against these support areas, 790 to 800s, 760s, and 720s for rotations back up. And looking for short setups against the 880s and the 930s for rotations back down, maybe up to the 970s, these 3 resistance areas. And if one of them holds, could be a nice short trade setting up there. I wouldn't be super aggressive on those shorts. I would look for a better setup. It's an edge up here, but not. I can't quite say how strong it is. It's stalled here for a few times, so definitely worth looking for a short setup, and then let's see how far I can take it on the downside if resistance holds. So that's kind of where we start. But I would start off, as I said, both ES and NASDAQ. Start on a long bias. Just keep in mind that this probe to the upside and early strength could be followed by a pretty good pullback if they fail to take out the highs and the sellers start piling on. And usually that starts with a couple of algos knocking it down, and then you get the pile-on effect, and then the whole thing spins out of control. Usually how that whole thing develops. And then oil and gold. Gold is my capital flow on gold. Right up here against this low volume area at the 33.55s. And they take that out, we may be right back up in this upper area. They were up here quite a bit before. And you can see here, I split out the age right there. They were up here building value, and there's a fair amount of volume built up here right now. So not any good splits to work with on the F1. That's why I have it all folded together. You are watching that volume profile in the background. So you see that low volume area to the 33.55. If that comes out, look for a run up here to the 33.80, maybe higher. And if it holds, look for rotations back down to the 33.40. So we're right up here. And I would look for short setups against that 33.55, 58. 55, 57, 58 is the resistance area right in front of us. And maybe up to the 62s. If both of them comes out, I would look for a run up here to the 80s. So that's right up here against that edge right now. So that's gold. looking for short setups against resistance. Let's see if that holds. So looking for some early strength. And if it doesn't hold, looking for a rotation back down here to the 3340s. If they do take out the 62, 63s, looking for run up here to that level, 75 to even up to the 88s here. So this general volume area up there. So that's gold. Let's see if they can take out that low volume area. Now, remember we have rollover coming up on Thursday, Friday, and not on gold, but on the indices. I'll touch on that in a little bit later, but finally wrapping it up with oil. Oil is definitely trading higher, so not quite sure what's driving it. If it's a demand picture, demand increase due to the good people liking the economy, because the economy is pretty strong right now. And it's holding up pretty good. The employment situation now came out pretty good, so it could be a demand thing on oil. It could be also a concern about what's happening in the Iranian situation of Ukraine, causing some geopolitical concerns, driving or creeping or letting oil creep higher like this. So it's trading higher, so something is driving it higher. I can't quite say if it's a demand issue or based on the economy or if it's related to some geopolitical thing. But the fact that it's trading higher, it means that we're trading it from the long side to get started. So we're going to buy against the 65.20s, 64.75s, rotations back up. I would say below the 64.25s, sorry, 64.75s here, take off the long bias and just go back range bound. So I'm looking to buy against these first two support areas, and if that 64.75 comes out, I would take off the long bias and go back a range bound. And on the way up, I'm not going to be aggressive on the short side at all. When it moves like this in little small increments, the short side is certainly short opportunities against 65.70, but if it takes it out, we just have to wait and see where they find the next edge. These prior edges could hold. We have a volume edge coming up in front of us. That's edge right there. And that's also the attractor. So that's where I think they're heading, 66, 60 to 67. And then let me see where they're going to go from there. So I'm going to stay on the long side. Not going to be very aggressive on the short side on oil. That's going to be maybe buy weakness here. I haven't traded oil at all for a while. It's been kind of a sloppy action. Doesn't move a whole lot. It's like been these big reactions and then nothing. Big reaction. It's just kind of sloppy to trade. So yeah, stayed away from it. So, but that's oil, and so trade oil from the long side. Gold. Look for early strength on gold, and let's see if they can take out the 58, 59s, maybe even 63s. If so, stay on the long side. Otherwise, look for that retracement trade. Now back to the ES and the Nasdaq, and we have a rollover coming up on Thursday. Thursday is going to be last trading day on this expiration, rolling to September U25 on Friday. All right. I sent out an email about that last week as well. So, what was it last week? Yeah, it was last week. So you should have that email as well. All right. So, I think we'll wrap it there for now. So good trading, guys. And I'll see you back at 11:30 for the next update. And not much news to drive the market today, so just kind of hang in there. All right, guys, later.